Good morning, everyone. I'm Alex from BCR, and this is your market update for Monday, September the 29th. So, the US dollar index. Last week, the US dollar index saw a mixed performance. So, August PCE inflation data came in line with expectations. So, headline at 2.7% and core at 2.9%. So, despite sticky inflation and stronger than expected consumer spending, the dollar retreated slightly after hitting a high of 98.6. So this is reflecting hesitation at these key technical levels. So the Fed remains cautious, prioritizing data over early rate cuts. However, technically, the dollar index is holding above the 98 level. So this has potential to move towards 99 if we can break above the resistance at 98.6 to 98.63. However, if it falls and dips below 98, support lies between 97.69 and 97.17. Right now, though, markets are waiting for stronger macro signals before committing to any breakout. WTI spot crude. So WTI crude surged to $65.20 last week, marking its best week since June. This was driven by geopolitical tensions and supply disruptions. So the Ukrainian attacks on Russian energy infrastructure led Moscow to cut exports. So this is while the US also pressured Turkey to reduce Russian imports. On the technical front, WTI broke above key moving averages with bullish momentum confirmed by a golden cross. So this is between 5-day and 50-day averages. So resistance lies between 65.61 and 66.53. This has potential to test the $68 mark if broken. On the downside, a fall below $64.04 could lead to support tests at $63.28 or lower. Overall, tight supply and interest rate uncertainty remain their key drivers. So gold extended its gains last week, touching 3,784, just shy of its all-time high of 3,791. This marks 6 consecutive weeks of gains, supported by safe haven demand amid trade tensions and geopolitical risks. The US dollar's pullback after the PCE report boosted gold even further. So technically, gold is holding above 3,750, with the 5-day moving average acting as key short-term support. A breakdown below 3,700 could signal a deeper pullback towards 3,650. However, on the upside, a breakout above 3,752. This could lead an open door to retesting and possibly breaking the 3,791 high. So 3,800 should be your next major target. And finally, the Aussie-US pair. So the Australian dollar dropped sharply last week, hitting a near 3-week low at 65.26. So this was due to stronger US data, which boosted the dollar and hurt risk sentiment. Domestically, Australia's August CPI rose to 3%, reducing the likelihood of a near-term RBA rate cut. From a technical standpoint, the Aussie US dollar is trading below key moving averages with a bearish RSI, suggesting continued downside pressure. Support levels to watch are 65 and 64.83, while resistance lies at 65.93 and 66 cents. A rebound above those levels could bring the pair back towards its recent high of 67.07. So to wrap up, this week, markets showed mixed signals. The US dollar index held firm above 98, but still needs stronger data to break higher. WTI surged on geopolitical tensions and Russian export cuts, with bullish momentum still intact. Gold extended its rally near all-time highs, fueled by safe haven demand and weaker dollar. Meanwhile, the Aussie dollar dropped sharply on stronger US data and fading rate cut hopes. But the technicals still could offer a rebound. So overall, markets remain sensitive to inflation data, Fed policy signals, and global geopolitical risks.